For this session, we will talk about your specific intangible assets, and we will start with your patents. So patent is defined as the right given by the government to the inventor to make, use, or sell his invention for a term of years. So if ever you invent something, you need to register it in the government so that you have the exclusive right on that particular invention. So it doesn't mean that if you invent something, you can already make use of it and you can sue anyone. The first one has the patent on it, has the first right. So under US GAAP, this is known as your technology-based intangible asset. So remember, during our previous meeting, we said that your intangible assets can be acquired through purchase or through internal generation. So remember, if that is purchase, still we will measure it at cost. So cost is equal to your purchase price plus directly attributable cost. Take note for your purchase price, this depends on the mode of purchase. I hope you already reviewed the different mode of purchase. And when we talk about your directly attributable costs, these are the costs necessary for the present location and condition of the asset. Take note at some point, your directly attributable cost is exhaustive. So when we say exhaustive, some textbooks really list down the different directly attributable costs. And if we do that, if we will try to memorize all the directly attributable costs, what will happen is that there will be a possibility that you will mix up the different directly attributable costs on one particular item to another item. Therefore, always ask yourself if ever you are confronted with directly attributable costs, is this necessary for the present location and condition of my patent, of my copyright, of my trademark, so that you will include it or not. So use your judgment for your present location and condition costs, or your necessary costs, or your directly attributable costs. Another mode of acquisition of your patent is your internally generated patent. So when we say internally generated patent, that is a developed patent. So normally, this type of patent goes with your research and development until such time it is already developed. Take note, what is only included are these two items. First, your licensing costs, and then your other related legal fees. So remember before, we learned that in your research and development, all research costs are to be expensed, and all development costs are either tested, whether expense or capitalized. But when do we capitalize it? We capitalize it only if I TAMI is present. So we go back to your development costs. So when can we say that there is technical feasibility? When can we say that there is technical feasibility? Remember our premise a while back in your patent, we said we cannot make use of the patent and profit from it unless we have registered it. So in short, one important characteristic of a patent is that it is registered in the government. Therefore, when can we say that the use of that patent is feasible? The use of that patent is only feasible or it becomes feasible once it is registered in the government. So what are the costs normally on the registration in the government? That is your licensing and other related legal fees. Take note again, in this patent, we can only make use it upon registration and upon approval by the government. Therefore, once approved, we can say there is a feasibility as to our use of patent. Remember again that on our theory part, all of the different items must be present. But in problem solving part, what you need to see is the technical feasibility. Therefore, guys, if you are given R&D as to your patent, always take note that we will only capitalize the development cost on the patent once there is a licensing and other related legal fees. So in short, at the time there is licensing onwards, if that is the development stage, those items are added as cost of your patent. And what are those items? Only two items, licensing and your legal fees. Sir, why? After licensing and legal fees, normally you will not already develop the patent. It's like that the licensing and the legal fees are the uh, end process under your development of your intangible assets. So in short, you just need to finish it first, the invention, you finish developing it until such time you register it to the uh, intellectual property office. Okay? So here, take note, what are the inclusions as to your R&D patents, licensing, and related legal fees. So after knowing those items, we go now to the cost of patents that are expense. So what are the costs of patents that we expense? So generally, all research and development costs are expense. Why? Because take note, the licensing and your legal fees happens after you finish the particular invention. Therefore, in short, all development costs prior to licensing and legal fees are also expense. I hope we are already cleared here. Next, we need to look as to your subsequent expenditure. Remember, we learned before in our previous discussion that your subsequent expenditure can be classified as either a revenue expenditure or a capital expenditure. And when we say revenue expenditure, it must be expense. And when it is a capital expenditure, it must be capitalized. Okay? So what are the revenue expenditures considered to be expense as a subsequent expenditure on your patent? And that is your legal fees and other costs of successfully prosecuting or defending a patent. So any legal costs on a particular case as to your patent must be expense. Any legal costs on defending or prosecuting your patent must be expense. So for example, you have already registered a patent and sometime someone used your invention. So it is likened to your invention. So what will you do? You will file a case against that particular owner of patent. That there might be a patent infringement. So any infringement on your right as to that patent use, whether you prosecute it or you defend it, will be considered as an expense. So any cost of defending the patent or prosecuting the patent must be expense. Take note of that. So after knowing your cost or your initial measurement, we go now to your subsequent measurement. So how do we subsequently measure your patent? Okay. So we already discussed one item of your revenue expenditure, and we said that item of revenue expenditure is known as your cost of suit or cost of defending or prosecuting your patent. Now, maybe you're asking me, sir, how about a capital expenditure? What is a capital expenditure on your patent? The capital expenditure on your patent is known as the purchase of a related patent. Sir, why do we consider the purchase of a related patent as a capital expenditure? Because normally, if ever you have a patent and then you have a competitive patent. So when we say competitive patent, it is somewhat related to your patent. It is part of your competitor's patent. So if you purchase a competitive patent, what will happen to your patent? Okay, so again, you have a patent And then there is another patent, a competitive patent or a related patent. So if ever you will not purchase that competitive or related patent, what will happen to your invention? There might be a possibility that your invention may be phased out because again, there is another or a new or competitive patent. So to protect your patent, you purchase that related patent. So can you see now the economic benefit of purchasing a related patent? It helps you to protect your patent. So you can still make use of your patent. Sir, what's the difference between the cost of suit as to the purchase of a patent? In your cost of suit, there might be a possible infringement of your patent. So we have here a right. You have here a right that you protect. So whether or not you win that particular case, your patent is still subsists. However, in your capital expenditure, if in case you will not purchase that competitive or related patent, there is a possibility that your invention or your particular product will be phased out because of that particular patent. Hence, the future economic benefits here is the problem in your capital expenditure that maybe there will never be another flow of future economic benefits. So you need to protect it. Since there is a future economic benefit because of the purchase of the patent, we will capitalize it. Okay? So revenue expenditure, the cost of suit, defense or prosecution of patent, and the capital expenditure is the purchase of your related patent. We go now to your measurement. So we're done with the initial measurement. We go now to your subsequent measurement. So how do we amortize your patent? So to amortize your patent, if it is only your original cost, therefore no capital expenditure, it is only cost over lower of legal or useful life. Lower or legal or useful life. What is the legal life of a patent? 20 years and non-renewable. Take note, it is non-renewable. Why? Again, I told you, once a patent is granted, normally that will not be renewed because after some time there will be a new invention that will be better than your invention, especially these times. Therefore, what will happen to your patent? It lost its value. So sir, why don't we need to deduct the residual value? Because our main formula before is cost less residual value divided by life. So remember the life of your patent, what do? We compare it to your legal or useful life. What is the legal life of our patent? 20 years. Sir, why do we not deduct your residual value? Again, what is the rule? The rule in your residual value, general rule, it is zero. Unless there is a committed buyer or there is an active market. How about if you have a capital expenditure on your patent? Therefore, there is a related patent. So what do? If there is a related patent, we add the value of your related patent. Why? Because it is a capital expenditure and capital expenditure increases the value of your assets. So what do? We get the carrying amount of your old patent. We add the related patent. Okay. So why do we divide it on your new life or why do we divide it on your old life? So when do we divide it on your new or old life? We divide it on your new life if ever the related patent extends the life. So the related patent extends the life of the patent and old life if ever the related patent does not extend the life of the patent. Okay? So you use the new life only if the related patent purchase extend the life, and you use the old life if the related patent does not extend the life. Okay? So we already discussed the necessary rules on your patent. Let's proceed and have an example of a patent amortization. So acquired patent on July 1, 2018 for 900,000. It was expected that the patent would last for 25 years. On July 1, 2020, the patent was successfully defended against an infringement case in which the legal cost amounted to 65,000. What will happen to your legal cost? The legal cost is expense. Okay. So we have here 900,000. The useful life is 25 years. If we amortize a patent, how do we amortize again? Cost divided by useful life or legal life, whichever is shorter. So our cost is 900,000. What is the legal life? The legal life is 20 years. The useful life is 25 years. So what is the lower number of years? 20 years. So what is your annual amortization? Annual amortization is equal to 900,000 divided by 20. So we have here 45,000. So this is your amortization expense on 2020. So what is the carrying amount on December 31, 2020? So our cost is 900,000, right? And there is an amortization on 2018. Since we purchased it on July 2018, that is only one half. 45,000 times one half, or 45,000 multiplied by 6 over 12. Because the purchase date is July 1, 2018. So how much is that? That is 22,500. We have another amortization on 2019 since 1 year, 45,000. Another amortization on 2020, 45,000. So what is the carrying amount? 900,000 less 22,500 less 45,000 less 45,000 will give us 787,500. Okay? Gets? I hope you understood this example. So it's just a simple amortization. Next, here the useful life is 16 years. Okay, so same, almost same, but the difference is the useful life. So the useful life is 16 years and the legal life is 20 years. So what do we use then uh, as the base year for the computation of your amortization? So amortization is equal to 900,000 divided by the lower between the two, 16 years. So divided by 16. So what is your annual amortization expense? 900,000 divided by 16 is 56,250. Next example, another patent amortization. Okay. However, take note here, there is a related patent that was purchased for 300,000 pesos. So on the related patent, what is the treatment again? We will treat it as an addition to the cost of the old patent. Okay. So first, we need to get for the carrying amount of the patent on January 1, 2020. Okay. So since we have 900,000, we need to deduct how many years of patent amortization. So 2018 and 2019. For 2018, we have January 1. 2019, we have 1 year again. So 1 year, 1 year. So we have 2 years of patent amortization. So 2 years. How much is our annual amortization again? 2 multiplied by 900,000 divided by 16. So what is the carrying amount of your patent on January 1, 2020? So we have here 14 over 16 multiplied by 900,000. We have 787,500. Okay. Sir, how did you get 14 over 16? Diba we have 900,000. What is the actual life? 16, right? How many years had been used? 2 years. What is the total life? 16. That's why it's 900,000 times 14 over 16. Okay? So that is one shortcut in computing your carrying amount. So since we already computed the carrying amount of the patent at 787,500, we get the cost of the related patent, which is 300,000. If ever there's no extension of life, so what is the remainder years? 16 less 2 is 14 years. And then, if there is an extension, meaning 787,500 plus 300,000, sabi dito, if there is an extension, you have additional 6 years. So 14 plus 6. Okay? So if there's no extension, what is the annual amortization? So we have here 77,678.57. Okay? If there is an extension, 787,500 plus 300,000 divided by 20 years, we have 54,375. Okay? Let's go back to on this example. So remember, if there is a subsequent expenditure, particularly a capital expenditure that is a related patent that is purchased, you will add the cost of the related patent to the value of your old patent. So first, we need to get for the value of your old patent at the time of purchase. So the time of purchase of the related patent is January 1, 2020. So we get the value. So to get the value, that is 900,000 multiplied by 16, that is the useful life, less 2 years. Why 2 years? You purchased on 2020, right? And initially, you are holding that on 2018. So 2018, 2019, 2 years had passed, divided by the useful life. So our carrying amount will be 787,500. So our carrying amount will be 787,500. So after getting your carrying amount, what we do is we add the cost of your related patent. So the cost of related patent is equal to 300,000 pesos. That's why we add in your 787,500 the 300,000 pesos. And there are two chances as to your patent amortization with related patent. That is whether it extends the life, so there is an extension, or whether there's no extension on the life. If there's no extension on the life, whatever is the remaining life, that is 16 less 2, you divide the cost or the carrying amount of the old patent plus the related patent. If there is an extension, you add the extension on the life. So 787,500 plus 300,000 divided by 14 plus 6, we have 54,375. Okay? So we're done with patent. We proceed now to copyrights. So what is a copyright? If there is a technical invention, there is also an artistic related invention. And what are those artistic related invention? That can either be literary, musical, or artistic work. So if there is an exclusive right as to a particular invention or technology, there is also an exclusive right as to your literary, musical, or artistic work. We call that your copyrights. So if you have exclusive right granted by the government to the author, composer, or artist to reproduce, publish, sell, or distribute his literary, musical, or artistic work, we call that as a copyright. Again, what is important here? There is a grant by the government. There is a grant by the government. Okay. So we need to look now as to the initial measurement of your copyright. So how do we initially measure your copyright? It depends whether it is acquired through purchase or through development. If acquired through purchase is still the same, purchase price plus directly attributable cost. If that is through development, you add all expenses incurred in the production of the work plus any cost required to obtain or establish the right. So this is just like the same, this cost required to establish or obtain the right is just the same in your patent. However, we include here your expenses incurred in the production of the work. So why do we need to include the expenses incurred in the production of the work unlike in your patent? Because in your patent, there is a possibility that it will be denied. However, in a copyright, normally, if there is a new textbook, it cannot be denied because almost all of works that is artistic related is always a new work. So bibihira lang naman yung mga nangongopya ng works as to your copyrights. That's why all the expenses incurred in the production of the work, let's say for the textbook, all your expenses to produce the textbook should be also included, and the cost required to establish or obtain the right. Take note, only the particular or the original work. not all of the different textbooks. For example, you have a textbook, you produce 1,000 textbook. Sir, the cost of the 1,000 textbook should be included? No, only the production of the original copy, and that is the original textbook. Okay? So take note of the change here. A while back in your patent, the cost of your internally generated patent is only the license and legal fees. While in your copyrights, what is now included in your internally generated are your cost of production plus license and legal fees. So let's talk about your subsequent measurement. So how do we subsequently measure it? Do we have any revenue expenditure that we need to talk about? There's no actually revenue expenditure that is talked about in your copyrights. If there is any cost of suit, again, you will expense it. So there is no special uh, revenue expenditure. How about the capital expenditure? Normally, you do not purchase a related work, or you cannot say that, let's say I'm Valix, I have intermediate accounting book. I'll purchase the book of Sir Milan or Ma'am Cabrera because they are related. That cannot be, because you cannot consolidate the workings of different authors because they have different ways or styles in writing their textbook. So normally there is no capital expenditure that we discuss in your copyright. So how do we amortize it? Original cost over useful life. But take note, we use your useful life instead, not legal life. Sir, why not legal life? Because the legal life is the lifetime of the author plus 50 years after his death. So for example, I am currently 24, and then uh, let's say I will live until, I'm happy if I will live until 60. So my lifetime is 36 years plus 50. So 86. So here, you do not know if ever, you cannot really estimate my lifetime. So we cannot estimate our lifetime. Therefore, the legal life normally is hard to estimate. It's easier to estimate the useful life. So such that normally a textbook has a useful life of 1 year. As you can see, the editions, it's always change every year. So that's how the copyrights work. So instead of legal life, we use your useful life. Just take note, for theoretical purposes, it is the lifetime of the author and 50 years after his death. So in our example, why did I disclose my? I'm 24, and then 60 years, let's say that's my estimated life. So 36 years plus 50, 86. Okay? That's for copyrights. Now we proceed to another type of intangible asset. We have your trademarks. So for trademarks, these are necessary marks that you see on a particular brand or product. So these are symbols, sign, slogan, or name. So for example, Coca-Cola. Coca-Cola itself is already a trademark. That is a name. If you can see the shape of a Coca-Cola, that is already a symbol or a sign. Love ko to, McDo, that is a slogan that can be considered as a trademark. So it is classified as market-related intangible asset. Okay? So how do we account for your trademarks? Usual, we need to look at your initial measurement, your subsequent measurement. Because again, when do we recognize if it meets the definition of an intangible asset and it is probable and measurable? So in all specific intangible assets, that particular recognition criteria is the same. So the difference mainly is your initial and subsequent measurement. So let's talk about the initial measurement of a trademark. So if the trademark is purchased, still purchase price plus directly attributable cost. But if the trademark is internally generated, what are the costs that is included? So those are the costs for the establishment of your trademark, which are your filing fees, registry fee, and other expenses incurred in securing the trademark. So in short, only those costs for the securing of trademark, just like your patent. Okay? Why? Because here you need to take a look if ever you have the same mark as the others. So for example, if ever there is a Love Koto already slogan and you want to register Love Koto again, that cannot be. Okay? So it must be approved first as to your intellectual property office. So for internally generated trademarks, when can we say that we can capitalize it? Only the expenditures required in establishing the trademark. So filing and registry fees, and in those expenses incurred in securing the trademark. So almost like your patent. We go now to your subsequent expenditures and capital expenditures, which are your subsequent measurements. So for subsequent measurement, we start first with your revenue expenditure. So what revenue expenditure is unique as to your trademarks is still the legal fees and other costs of prosecuting or defending the trademark. This particular revenue expenditure, take note, it will be expense. We already discussed why we need to expense it. Sir, question, what happens if ever we lose? So let's say you lose or you lost in a case. If you lost in a case, what will happen? So the remaining cost of the trademark shall be written off as a loss. So for example, at the time of the case, the carrying amount of the trademark is 385,250. And then suddenly you lost in the case. So what will happen to this one? You will write it off as a loss. So loss on trademark. So 385,250, you remove the trademark itself, 385,250. Because again, take note, if ever you are unsuccessful, you write it off as a loss. So all the carrying amount will be treated as a loss. How about our capital expenditures for trademarks? Normally, there is no capital expenditure related to a trademark. Hence, we will not talk on any capital expenditure on a trademark. We go now then on your subsequent measurement as to your amortization. So how do we amortize your trademark? So it is original cost divided by useful life. And the legal life is 10 years and renewable for periods of 10 years each. So the problem here is it can be renewed. Since it can be renewed, normally, what we do is we only use the useful life. Why? Because again, guys, since it can be renewed, you do not know if ever how many years or how many times will you renew. So you do not know if ever it will renew, it will be renewed perpetually. Hence, you cannot estimate the actual legal life. However, if the problem says that the trademark can only be renewed once, or there is no intention to renew, then your legal life is 10 years. So you have now time to compare the useful life and the legal life. Only when, if the problem states that the trademark can only be renewed once, or there is no intention to renew the trademark. We go to another type of intangible asset, and that is your franchise. So a franchise agreement is a contract whereby one party called the franchisor grants certain rights to another party called the franchisee. So this is prevalent in Philippine settings such as Jollibee, McDo, Chowking, your groceries, your what else? Your supermarkets, your different stalls of brands. Those are different franchise. So there is a franchisor and a franchisee. The franchisor is the actual possessor of the right. And then the one who wants to use of that particular right is known as franchisee. Okay. So under US GAAP, this is known as a contract-based intangible asset. So the question is, can you purchase or develop a franchise? So let's go to our initial measurement. So on your initial measurement, we only have your purchase. Why? Because you are accounting here as the franchisee. You are accounting here as the franchisee. Being the franchisee, take note guys, you cannot develop a franchise. You cannot develop a franchise because it is based on a contract. Therefore, the franchisee can only purchase it through the contract. Okay? So, how do we account for it? Purchase price plus directly attributable cost is still the same. How about the subsequent measurement? So for subsequent measurement, take note, we will talk about your subsequent expenditures and your amortization. So for subsequent expenditures, we have your periodic payments on the franchisor. It is called as periodic franchise fee. So guys, if ever you are wondering, let's say you have Jollibee franchise, a certain percentage of your revenues will be remitted to the franchisor. So for example, your total revenues is 50 million pesos. A certain percentage of that will be given to your franchisor. So let's say 2%. So the 2% of 50 million, that is 1 million pesos, will be given to your franchisor. This 1 million pesos is known as your periodic franchise fee. Or sometimes it is known as continuing franchise fee. What will happen to your continuing franchise fee or periodic franchise fee? You will expense it. So normally guys, for problems concerning franchise, you will be given the following terms. We have your initial franchise fee and your continuing franchise fee. The initial franchise fee, this is the cost of the franchise. While the continuing franchise fee, this is a subsequent expenditure, you will treat it as an expense. Okay? So again, problems concerning franchise, you will meet these different terms. Initial franchise fee, that is the cost of the franchise. The continuing franchise fee is the subsequent expenditure treated as an expense. Okay? How do we amortize then our franchise? Or what is our subsequent measurement? So our subsequent measurement, if ever the contract gives a particular period, so we have a definite contract, you will amortize it. So how do we amortize it again? Cost divided by useful life. Sir, don't we have a legal life? No, because unlike your copyrights, trademarks, and patent, this three comes from the government. And the government, under our law, under the law, there is a maximum life of a particular intangible asset. Okay? There is a maximum life on a particular intangible asset. But this franchise, take note, this is based on a contract. So on your contract, if ever it is definite, you will amortize. But if the contract is indefinite, no amortization, but always tested for impairment. How do we test it for impairment if ever it is indefinite or perpetual again? We get for the cash flow, we divide it to your market rate or interest rate. What is this formula again? This is the formula of perpetuity. That is the formula of perpetuity. Okay? So let's have a comprehensive example of your amortization. So CDH company discloses the following items that it recorded in its intangible assets. We have a franchise 8-year life, patent 18-year useful life, So guys, if ever it is patent, only patent, you compare it to your useful life. You compare the useful life to the legal life. So the legal life is 20 years. 18 versus 20, lower is 18. This another patent, why 25 years? 25 versus 20, lower is 20 years. Copyright, since there is a finite useful life that is given, you use that already. Why? Because we said on your copyright that is the life of the author plus the plus 50 years thereafter. So it's hard to estimate. But since in this problem it is estimated, we can already compute it. Okay. So on January 1, 2019, we have 3.5 million divided by 8 years. We multiply it to the period, so 1 year, 12 over 12. So how much is for your franchise with 8-year life? 3.5 million divided by 8, we have 437,500. We have April 1, 2019, so the value is 1,560. You divide it to the useful life, that is 18. And the period. So April 1 until December 31, 2019, we have 9 over 12. April 1 until December 31, 9 over 12. So how much? 1,560 divided by 18 times 9 over 12. We have 65,000. Next, July 1. July 1, we have 1,560,000 still. But the useful life now is 20 years. You multiply it to the period, July 1 until December 31, we have 6 over 12. So 1.56 million divided by 20 years divided by 2 will give us 39,000. September 30, we have 4.5 million divided by 20 years. September 30 to December is October, November, December, 3 months. So 4.5 million divided by 20 times 3 over 12 will give us 56,250. So the total amortization, 47,500 plus 65,000 plus 39,000 plus 56,250, we have 597,750. Okay, so let's memorize the rules on the amortization. What are the different items that we have already finished? We have your patent. You always compare the useful life versus 20 years. Copyright, if there is a useful life, use the useful life already because, again, the legal life given is the life of the author plus 50 years. Trademark. Okay, so in a trademark, take note, you have a legal life of 10 years. However, it is renewable. So if the useful life is given, use the useful life again. And then for a franchise, take note if ever it is indefinite, so use your useful life. It is indefinite, you will test it only for impairment. So no amortization if ever it is indefinite. Okay, we go now to another uh, type of intangible asset, that is your goodwill. So when do we recognize goodwill? Goodwill is only recognized during your business combination. There is no internally generated goodwill. So no internally generated goodwill. It is only through business combination. Okay. Take note, standing alone, goodwill cannot be bought and sold. It can only be through business combination. So normally in a goodwill, what we do is we look as to your excess earnings and your normal earnings. So whatever is the excess earnings over your normal earnings, then that is either capitalized or we get the value of it over the life of the particular goodwill. Okay? So what is a business combination? A business combination happens if ever two or more businesses are combined. So for example, A company will purchase B company. Okay? So during that purchase, there might be a goodwill. So how do we measure your goodwill? Your goodwill is measured depending whether it is residual or direct. But before that, let's just discuss this one. So internally generated goodwill, take note, shall not be recognized as an asset, but a purchase goodwill, this is through a business combination, is recognized. Okay, we said that a while back already in the previous slide. I just need to place an emphasis. So how do we initially measure? The measurement is your residual and your direct. So under residual, goodwill is measured by comparing the purchase price of the entity with the net tangible and identifiable assets. Normally, you compare the purchase price versus the fair value of net assets acquired. Sir, what is this fair value of net assets acquired? That is the fair value of assets of the acquired business less the fair value of liability of the acquired business. And if it is direct, goodwill is measured on the basis of the future earnings of the entity. So when we talk future earnings, we get for the future earnings less the normal earnings. We call this one your excess earnings. So a while back, we already discussed what is excess earnings. Okay, so we're done discussing what do we mean by excess earnings. So let's have an example on your residual and your direct. Let's start first with your residual. CDH Corporation concluded that the fair value of COA company was 80,000 and paid that amount to acquire all its assets. COA reported assets with a book value of 60,000, fair value of 98,000, and liabilities with a book value and fair value of 23,000. John also paid 3,000 to search si John ay si CDH. This is CDH. What is the acquired goodwill? So in acquiring goodwill, what do we compute? The purchase price versus the fair value of net assets. How do we compute for your fair value of net assets? Fair value of assets acquired. And then fair value of liabilities acquired. So what is the purchase price? CDH purchased COA for 80,000. Okay, so that is the amount that we paid. And then we get the fair value of net assets. So who is the acquired company? Take note, CDH purchased COA. So COA is the acquired company. What is the fair value of the assets of acquired companies? So COA reported assets, book value of 60, fair value of 98,000. What is the fair value of liabilities of the business acquired? So we have 23,000. That is the fair value of the liabilities as of the acquisition date. So what is the fair value of net assets? This will give us 75,000. So purchase price of 80,000 less the fair value of net assets of 75,000. What is the amount of goodwill? 5,000 pesos. Okay? Take note, goodwill only is present during business combination. Okay? So if there is no business combination, then you cannot measure a goodwill. So gets no residual. Again, goodwill is measured either residual or direct. In residual, just compare the purchase price versus the fair value of net assets acquired. For direct, we get for the projected earnings less the normal earnings, we have here your excess earnings. Okay? So this excess earnings can either be capitalized, we get the present value, or whatnot. Hence, we go to this particular example on your Goodwill. So CDH company is contemplating on acquiring COA. The following information was gathered. The actual earnings of COA for the past 5 years are 4.8 million, 5.2 million, 5.4 million, 5 million, and 7.2 million. Earnings in 2000X5 included an expropriation gain of 1.6. The fair value of COA's net assets at the end of 2000X5 is 40 million. The industry average rate of return is 12%. Probable duration of excess earnings is 5 years. How much is the estimated goodwill using multiples of average excess earnings? How much is the estimated goodwill using the capitalization of average excess earnings? How much is the estimated goodwill using present value of average excess earnings?